Alright, so we are now on our third video, and in this video we are going to talk about what is a swing trade or what is a swing setup. Now personally I have the maximum preference for swing trades. There is a logical rationale behind this. Well, the swing is essentially the best of both the worlds. In our earlier videos we understood what is a breakout setup. When the market is flowing away on the upside, you buy high, anticipation of selling higher. We discussed about what is a contrarian trade, that you essentially do the opposite of what the overall or the majority of the market is doing. And a nice mix of breakout and contra would probably give us a swing trade setup. Let's understand this. First, see, the breakout trader always went with the primary trend. If the trend is up, he'll buy. If the trend is down, he'll sell. Contrarian trader did exactly the opposite of it. If the trend is up, he'll try and do the opposite of that, that is short, and if the trend is down, he's going to try and do the opposite of that, that is look to buy. Now, when it comes to swing, it's got a nice mix. So, a swing trader will always first want a defined trend, and as I can clearly see over here, this is the primary trend, if you ask me, is up. As the primary trend over is up, a swing trader will never ever want to short this chart, will never ever look for a short setup. However, he is not going to buy at a high price. What he will do is he will wait for a short term correction. So, when the market goes through a short term correction like this or like this, and his assumption is that this is a short term correction and the primary trend will continue, the primary trend will continue on the upside, and with this assumption, with this anticipation, he would try to buy somewhere here. So, he is not buying at the breakout. Of course, he is not doing a contra trade. So, he is in line with the primary trend, but after a short term correction. So, he is buying low in a primarily structured uptrend, that is a swing long trade. A swing short trade is just the opposite when the market is in a defined downtrend. See over here, the primary trend of the market is down, and in this primary downtrend you get zones where the market corrects, that is it goes against the primary trend. So, we have a bounce back on the upside. And a swing trader expects that this is a short term bounce back, that I am going to sell on a rise, and soon the market will continue in line with its primary trend, which is down, and he will look to short or sell or exit somewhere here. And if you are doing this, then you are doing a swing trade. So, in line with the primary trend, but you do not wait for the lows to break, you are not a breakout trader. So, in line with the primary trend, wait for a bounce back, and then you enter a trade in line with the main trend. So, if I put it buy on a dip, sell on a rise, that is the kind of setup that I like or I prefer the most. This is the swing trading setup. Let us look at some practical examples. Now, this is again the chart of Nifty, and as you can see that this is a defined uptrend. If you are planning to buy here or if you are planning to buy here, this is a swing trade. Once you get a defined downtrend, look at this part of the chart, it was a defined downtrend. And if your objective, if your intention is, well, I have got a nice downtrend, I am going to wait for a short term bounce back, and I get a short term bounce back or a consolidation, and this is it, and I am going to short now or sell now, then you are thinking in terms of a swing trader. So, swing trade or a swing trading setup mixes the best of the trend following or the breakout and the contra, and this is the main reason why I have a preference of a swing trade compared to a breakout or a contra.